Good afternoon. My name is Angie Juzang. I'm co-founder of the Legacy Business League. That is a minority chamber of commerce that brings information and resources to different platforms and through different community partners. And today, our partner is Hancock Whitney, and I'm facilitating a discussion on housing and financial empowerment for those who are in the home buying process, whether first-time home buyers or investing in the home buying process for a second or third or fourth time. The folks on the call today are really just a plethora of information. This is the third in a series. And so we're going to make the videos available to those who weren't able to join us for the first two on the Legacy's website, and we'll have links on the social media page as well. We'll make them available to Hancock Whitney, and they can utilize how they wish. But today we're going to listen to our community partner from Mercy Housing, Ms. Victoria Mckinney, and LaCarsha is going to introduce the rest of the panel and tell us what to expect. Good morning. Good afternoon.
Okay, awesome. Thank you so much, Angie. As Angie mentioned, I'm LaCarsha Babers, and I'm the Community Outreach Officer here at Hancock Whitney. We just want to say good afternoon to everyone and welcome to session 3 of the Housing and Financial Empowerment 3-part series. And as she mentioned, if you missed session 1 and 2, don't worry about it. We have those details and we will make sure you are able to actually access that information, because you do want to get caught up, because session 3 is going to be the conclusion of this 3-part series. I'll just start off by saying happy homeownership month to everyone. And as you know, June is designated as National Homeownership Month. So congratulations to each of you for joining in. I will say that this event is hosted by Hancock Whitney Bank in partnership with the one and only Legacy Business League, as well as Mercy Housing and Human Development. During Homeownership Month, we are providing for everyone, giving them access to home ownership. As many people know, home ownership is the American dream for so many, and owning a home, I believe, represents number one, stability, financial success, as well as a key component for creating generational wealth, whether it be for your families or for your communities. Well, in this session, we're going to cover the mortgage loan process. And I know that there are several programs out there, several assistance programs out there. And so we've gathered several experts, our very own community lenders and the manager of mortgage loan production department. We have Owen Munton, who's going to be presenting some information to us on access to home ownership, as well as assistance programs. He's going to provide some details right after our very own Stephanie Johnson. She's going to be talking to us about some mortgage loan resources. There are assistance programs out there, but many people aren't aware of those. So we have experts on the line. We have the HUD certified counselor, Victoria Mckinney from Mercy Housing and Human Development, as Angie mentioned, and she's going to come with her expertise as well. So we'll start off with Stephanie talking to us about some assistance program, and then Owen's going to come in and talk to us about additional programs, and we'll end out with Victoria. But I do want to say we have our community lender on the line. She's actually over the entire community lending department, and she's on the line. And so I would like to start off by giving her an opportunity to just, chime in and give us like an introduction. Anything she'd like to open us up with, give her an opportunity to do so at this time. Tish Allen, if you will.
Good afternoon, and good afternoon. I want to thank you so much for joining this economic empowerment session today. I also want to thank you for not only dreaming about home ownership, but actually taking steps toward making your dream a possibility by joining us today to obtain information from the wonderful professionals that we have present today. If you have questions, we want you to ask them. The only bad question is the one that you don't ask. We want to know, because I'm pretty sure that we have the answer. So please don't be afraid. Don't be afraid. We want you to talk to us. So our goal is to help you plan. And the only way to plan, there's a need for dialogue. We don't want it to be one-sided. We are here to provide whatever information you think that you might need regarding the homeownership process. I'm pretty sure what we're going to go through is going to be at a high level. And so what's going to be important is that you engage with your housing counselor at Mercy Housing. If you've done that to get more detailed insight, or our professionals on the line, like Latanya Woods, who's right in the Biloxi Gulfport market, myself, and others that are also available. If you feel you need one-on-one, we're here for that. Owen is a wonderful professional in the mortgage industry with a wealth of knowledge. He's there to answer any questions that you have. This is what we do every day. A lot of times I understand that people get a little nervous when they talk to people in the finance industry. We're everyday people. This is what we do. It's like going to the doctor, right? You go to the doctor, and if you don't tell the doctor what your problem is, then he can't help you. Right. So if you tell us, I'm more than sure we have some sort of diagnosis, whether we can write a prescription today that will help you plan, or maybe there's a solution to say, you know what, you're ready to get started. Here's what we have for you. So thank you so much for joining. Again, I want to say happy homeownership month, and I wish you well on your homeownership journey.
Awesome. Thank you so much, Trish. We appreciate that. Now we're going to be back in the hands of our facilitator, Miss Angie Juzang. I think you're on mute.
Okay, we are going to go ahead and jump right into this. Can you see my screen? And is it the presentation?
We see the entire what's coming up next.
Okay. The full screen now?
There we go.
Excellent.
Thank
Okay, so we have outlined what the agenda will be. So we're going to go ahead and start with the assistance programs. I believe Ms. Stephanie's going to be the one that talks to us about that. So Owen and I will jump off camera now.
Good afternoon. Good afternoon. As they say in church, you have been properly welcomed to our program today, and we have a wealth of information to share with you. We will be reviewing the various down payment and closing costs assistance programs and their standard eligibility requirements. The first slide we'll talk about is the income limits. That's household versus application income. And what I mean by household, if you have a 18-year-old or older, or if you have another member in the household that has income, we're not using that income for qualifying for the mortgage. But in these programs, that when we say income limits, is households. So say you have an 18-year-old in college, most programs will require you to fill out a form. If they're working, we have to have their income. If they're in college, usually they'll ask for transcripts to see if they're full-time students, and not employed. And most bond programs will make you fill out a form saying that they have no income. And in some cases, I have had people say, well, how do they know that I have a person, eligible, with income? Well, they review your tax returns. If you're carrying that person on your tax return and they're working, well, of course, we have to have that income. Your minimum credit score, usually that's around 620. Housing and debt ratio, that's your housing to income, and your debt to income, that's with the house. Target areas, location where funds can be used. Home buyer, first-time home buyer, you must be a first-time home buyer, have a home buyer education certificate. Financial literacy training is kind of what we're doing now. Retention period, that means the length of time that the borrower must occupy the property as their primary residence. Some programs require recapture if you in the property less than 5 years, some 10. It depends on the program that you're in. Now, generally, these are basic requirements that may determine whether the borrower is eligible to be considered for down payment and closing cost assistance. And we'll go over a few other guidelines. Next slide. Next slide. The Gulfport and Biloxi assistant programs, we're going to review a few basic parameters available for bond and local down payment programs, subject to restrictions and funds that are available in the area. One of the the bond program is the Mississippi Home Corp. The state program is a Mississippi Home Corporation, and that's the MRB7 program. And they have another one called the Smart 6 program. Those are local down payment assistance programs, down payment and closing cost assistance programs. Both of those, the MRB7 is a state program, and I'm not sure, but I don't think Mississippi have housing down payment assistance, but they all come with a disclaimer. Usually we Hancock Whitney, I'm gonna read that to you. Hancock Whitney is not an administrator or owner of down payment and closing cost assistance programs offered through federal, state, and local agency, and does not guarantee eligibility, approval, or disbursement of funds. If we are an approved participating lender, we help facilitate the submission of the borrower's application for assistance, providing we have all the required documents. And we have no authority regarding the program review and decisions-making process and therefore cannot guarantee the program acceptable or approval. So we help facilitate it. We get all of the required documentation. For instance, the Mississippi Bond Corporation, if they require VOE, if they require check stubs, if they require tax returns, if they require a copy of your initial application, we facilitate, we get all the required documentation together, and then we submit it to the Mississippi Mississippi Home Corporation, and they're the ones that decide the approval on that program for you to be eligible to receive the 7,000 or in the Smart 6, whatever their requirements are. We just help you administer. We're not the administrator of the program. We just submit the information and wait for the approval. And once we get the approval, we move forward with the closing. The next slide.
Can I just add a little something to Stephanie's comments?
Go ahead.
If you go back to the slide that she was on, I apologize. What I wanted to just add a little to what Stephanie mentioned, in the Gulfport, Biloxi area, the most common and popular program that provides down payment and or closing cost assistance is the Mississippi Home Corporation program. They are an entity that is created to create affordable home ownership across the state of Mississippi. And with that, through this program, you can access a first mortgage program. So basically that's the loan to purchase the house. So as a lender that participates in the program, we can use this program to obtain your first mortgage loan. So that's the actual loan, the actual money to purchase the house. In addition to the loan, the program also provides a pool of funds that we can access to assist you with your down payment obligation, closing costs, and generally other costs associated with the loan. The assistance may not cover all of your costs. And so it may not be a situation where you can get the assistance and it covers everything and you're not required to use any of your own money, but it actually just helps to fill in the gap between money that you have and money that you may be short of to ensure that you're able to close on the transaction. And the beautiful thing about this program, there are several types of general loans that we can use in order to assist you. And if you were on some of the other sessions, you may have heard of a government loan called FHA. You may have heard the term conventional loan. You may have heard the term VA loan. You also may have heard the term of a rural development loan. All of these basic loan programs we can use through the Mississippi Home Corporation program. And in addition to that, also, if you're eligible, we can also access assistance toward down payment and closing costs. And the guidelines that she went over, there are general guidelines. every assistance program has some sort of eligibility requirement. And so our job is to determine whether or not you may be eligible for consideration. And if you are, as a lender, we will determine that. Of course, as the disclosure mentioned, we can't guarantee approval or funding, but what we will do our best is to make sure that that you are at least eligible for consideration. And that gives us a general path to be able to access programs that are available through the Mississippi Home Corporation program.
And also, Miss Victoria is gonna go deeper into the MRB7 programs and the Smart 6 programs when she comes on. And there's also one that we can add. The Mississippi Home Corporation is a second mortgage and to our first mortgage, and it's forgivable. There is meaning that if you stay in the property a certain length of time that's required by Mississippi Home Corporation, that there's zero interest to that second mortgage, and it's forgiven. That means that there will be a cancellation sent to your municipalities to cancel out those mortgages. The recording of that second mortgage. And we also have grant funds that we also can use for down payment of closing costs with the Federal Home Loan Bank. That's not a second mortgage. That's in the form of a grant assistance. So that's because it's not a second mortgage, it's a grant assistance. It can be also used with this Mississippi Home Corporation second mortgage and our first mortgage, because it's not a mortgage. All right, the next slide. Plan your way home. The future belongs to those that who dream, and we are here and to help you do that. So let's look at the next slide. If a borrower's total application income, next slide. If the borrower's total application income exceed 80% AMI, the property must be located in a low to moderate and minimum census tract. So let's look at that part. The lender credit up to $5,000, closing costs and prepaid only, limited to eligible first-time homebuyer and borrowers or properties located in Hancock Whitney target areas. That's the Gulfport, Biloxi, MSA, Harrison, and Hancock counties. 80% AMI, that's 48,000. And the income limits are up to 72,000. And usually when I'm doing an MRB, a Mississippi bond program, I look at that to see what the minimum income limit is for those bond programs if you're participating in those. But that's the AMI is 48,000 for those.
Miss Stephanie, I'm gonna jump in here and interrupt you just for a second because I'm playing devil's advocate. Y'all see and hear these terms all the time. Like, you can talk about this in your sleep, but for someone like myself and probably some people on the call, while you have the definition down there where it says AMI, I don't know what that means.
Area median income.
Okay, so I still need you to kind of explain that, and let's break down this chart of what we're looking at, so we can follow along with you, and maybe I certainly like to ask some questions. So when for those on the call, what Ms. Stephanie is saying, the MSA basically is just a layman's terms. That's your coverage area, right?
Yes.
Okay. Okay. And then so the AMI, area median income, what does that means? That is well, I know median doesn't necessarily mean average, but for in layman's purposes, the average income for people in that area.
Well, that's the medium income that's set by HUD, by the regulators.
Okay,
And it's, if you can't go over 80% of that if in the household or in the income, those are the income limits set by the programs
okay,
and by HUD for that particular MSAs. For
And so-
instance, go ahead.
And in addition to that, so generally, so for this program, for program purposes, if someone is applying for a mortgage with us, and their application income, the income that you're using to qualify for your loan, if it is 48,000 or less, we're just talking about the application income. If it's 48,000 or less, generally you're going to qualify to receive up to 5,000 towards your closing costs and prepaids. That's what this means. If your income, the income that you're using to qualify for your mortgage loan, if that income is greater than 48,000, but no more than 72,000, and this is specific to the Gulfport, Biloxi target area, then the property, subject property that you're buying or refinancing would have to be in a low census tract, and we get that, and you don't have to determine that. We have the census data to tell us if the tract location or the physical location of where the property is based up on governmental data. If it is considered as a low income tract, has nothing to do with the aesthetics of the neighborhood, has everything to do with economics. So they give us that information. They'll say, okay, this property is located in a low income census tract. This property is located in a moderate census tract. Or it may tell us this property is located in a majority minority census tract. So if the income is greater than 80%, greater than 48,000, but less than 72,000, then the property would have to be located in a low or moderate or majority minority census tract. So typically we have two ways of qualifying a potential applicant who can access our lender credit program of up to 5,000, either by their application income, if it's at 48,000 or below, or if it happens to be greater than that, then the other qualification is the census tract location of the property. And we use governmental reporting to provide that information to us to determine whether or not the borrower would qualify.
okay. The last two sentences, I think, are the crux and summary of what we're trying to get out of the slide, is that
The data is from governmental. If you're asking where we get that information from, it is supplied by government agencies.
Gotcha. Okay, very good. So essentially, what people on the call who are looking for resources can glean from this information is that you're able to help with a certain income level, and you've got the
Yes.
metrics here on what the income level is and what you'll be able to offer. So that, I think that's really the kind of the summary of what we have. And then and here it is fantastic in the way it's laid out. So very good synopsis. And I'm sorry to interrupt you, but sometimes that's what I'm here for.
Yeah,
Just to
yeah,
kinda-
and a lot of times people want to know where we get those analysis and data from.
That was perfect.
And we do get that information. We don't just, come up with our own numbers. We get those analysis and data to know what the 80% AMI for your area, to say 48,000 is the limit to do 80%. We get that from the governmental agencies that do the analysis for us. Also, they create the census tract maps for us and let us know the information for like the income limit for that certain MSA. That data is supplied by government agencies.
And that's so important to know, because if you go down this road and start on this track, 1 year, and then the following year your friend may be looking for something, but the metrics has changed based on the government, and so you might have received something 1 year and then or 1 month even, and gone and told a friend or family, and then they walk in hoping to get the same thing, but you have to go and implement the qualifications and the parameters that are set by you, by these government agencies. So I completely understand, and thank you for explaining that.
And the data change annually from year to year. For instance, the 2020 data was higher than the 2021. I had people qualified in 2020 by the 80% AMI, but when the 2021 data was published, they no longer qualified because it was lower. We haven't seen that a lot, but it happened last year, 2021, where the income was lowered in the 80% AMI than
Gotcha.
what was originally approved in 2020. So we had people out there, that were approved in 2020 that were no longer qualified in 2021.
That makes sense.
Okay, let's go to the next slide. Thank you. Plan your way home. Lender credit, eligible transactions. We're going to review what's eligible for the Plan Your Way Home lender credit. Purchase, owner occupied, rate and term, refinance, and it must be your primary residence. Eligible property, 1 unit. And when I say 1 unit, that's single family, including eligible and HUD approved condo projects, 2 units, principal residence. But one of the units have to be if you have a multi-unit, 2 unit, one of the residents you have to occupy it as your primary resident for it to qualify. The maximum purchase price and appraised value, and I'm assuming for the Mississippi MSA area, is $280,000. Eligible products for financing, we can do those loans that Tish was talking about, the conventional, the HFA bond, the rural development, the Hancock-Whitney opportunity, the VA, the HFA preferred, the FHA, the FHA advantage, and we have MI relief. You are required to have a homebuyer education certificate on the purchase transaction must be completed by an approved homebuyer training course. Rate and term refinance must be completed by a HUD lender approved financial literacy course. Now you can do the online, for instance, if you go to the MS Home Corporation, they do have you can go under the homebuyer education and click on that. They have several free online classes that you can take. And then I know Mercy Housing is on here. They offer other options for you to get your homebuyer education. The next slide. Well, we want to hear from you. If you have any questions and questions, I'll be happy to answer those questions for you. And it has been a pleasure to serve you and help you navigate through your journey of obtaining home ownership. And at this time, if you have any questions for me, I'll be happy to answer you for it.
Please feel free to make sure you put your questions in the chat. And if you'd like to verbally talk with us, you're unmuted. And if you're not, raise your hand and I'll unmute you. But as you all were coming in, I unmuted you. So thank you so much, Ms. Stephanie. It's been a pleasure hearing your wonderful information over the last couple months. You can tell that you're passionate about what you do and that you're very knowledgeable about what you do. So I think that anybody that would be able to connect with you is in very good hands. So thank you so much.
Well, you're welcome. It's been my pleasure.
Okay. Oh, now we did have something come in that asked, what is the ideal credit?
Well, most programs take is 620, but ideal 640 and above, because we have a lot more. We have a wealth of products open for you if your credit scores are above 620. But FHA will accept the 620 credit score.
And if I can add to Stephanie's remark in this question about what is the ideal credit, and in simple terms, I'll probably say credit that has been that demonstrates that you've paid your creditors on time. Now, if someone has paid their creditors on time, then usually that can result into a credit score that's reflective of someone who has been paying their creditors on time. And then that history could lend itself to someone getting sort of a favorable, response when submitting a lender request, depending upon various other factors like income and liabilities. But really what lenders or creditors are looking for is your ability to pay your debt obligations on time. And I'm talking about installment debt, maybe like a car loan, a personal loan, student loans, or revolving debt like a credit card, paying them on time. And the reason why I want to make that clear is because a person could have, quote unquote, meet the minimum credit scores, and all credit scores are not necessarily created equal. So someone can have, let's say, meet a minimum credit score for a specific loan program or a credit program, but unfortunately, maybe there's some hiccups that have happened in life, and those payments, have not been paid on time, or there's not a history of the payments being paid on time, and especially if it's within 6 months to a year of someone applying for a mortgage. And so the best thing to do is to demonstrate for 12 months or more that you can pay your creditors on time. I think that's the best response I could give you for what is ideal credit. That's it.
I think that's
sometimes-
fantastic, because I'm sorry, who's Victoria?
Can I add one more thing to that?
Sure.
Sometimes I've seen credit scores of 700, but they have not demonstrated a 12-month period. So that's a factor too. Timelines of how long you have used credit, because that's our footprint. That's our history of knowing if you are managing your credit properly. If you've only had it 3 months or 6 months, well, the system does analyze that too. So timeline of how long you have demonstrated using credit is very important, along with, staying away from those limits on those credit cards. That's my favorite thing, telling people, if you want to enjoy good scores, stay away from the limits on those credit cards. Because you can pay everything on time, but if you're too close to the limits on your credit card, it's not going to give you a good favorable rate. So,
okay. And honestly, that's not something that I learned growing up or even as an adult. It was only recently about the paying it on time, because my credit score was relatively good, but I had some hiccups, through COVID, whether I was distracted or whatever. I didn't pay a bill and it hit it. And that really messed me up, so I really appreciate y'all for bringing that insight. Victoria, what you got?
I was gonna say, Tish really hit the nail on the head. You can have a really, really good credit score, and this happens quite frequently, actually. You have that 640 or even over a 700, but you may still have some collections on your accounts, or you may not, like Stephanie said, you may not have had credit established long enough. So basically what lenders are looking for, and there are caveats to it, obviously, but generally they really like to see at least 2 years of credit history, recent credit history. So
that's ideal.
At least two active credit accounts. So basically that could be like a credit card and even an installment loan. So they want to see that you can handle different types of credit, that you pay it on time, that you're not utilizing too much of your credit limits on your credit cards, and that you've had an active history for the last 2 years. And then of course, the big one, if you have any outstanding liens or judgments, that's going to prevent you from closing on a home. So you want to get out ahead of that as well.
Okay. So we have another question that says, do any of these programs help you have purchased land or trying to get a construction loan to build a first-time home?
So if they're asking specifically about like the down payment assistance programs,
I think it's pertaining to what Ms. Stephanie was reviewing.
Okay.
So Tish or Miss Stephanie, did y'all want to, I know that most of the times if it deviates from what we were talking about, I'd say take it offline and we could connect you, but I think it is a
So
good question.
This
think
is specific to a construction loan. Our program really focuses on existing homes. Like a home can be existing and newly constructed, but if it's for a new build, the program itself does not include new construction loans for new builds, like for land acquisition and the actual building, of the structure of the home. But of course, we do have construction loans, and Mr. Owen is the expert on that. And so if you have more questions around construction loans, he can answer that question for you. But generally, assistance programs support existing homes that is newly constructed, turnkey, meaning you can, walk in, as opposed to financing for the construction of a new home. Did I say that right? Okay.
And that's who I was going to refer you to. Mr. Owen is the expert on the construction loans. That's when I have a construction loan request, I turn them over to his crew.
Okay. Well, what I'd like the person that asked that question to do is connect with Owen. Then he's put his information in the chat, so I would cut and paste that into some type of document so you can hold on to it or write down his email address. And you can always get back in touch with me the same way that that you learned about us, and I can connect that. So we can we're gonna stick with the first time home buyer and or existing structure. So Ms. Stephanie and I are gonna hop off, and we're going to begin the presentation again, and Owen is gonna lead us through it. So Owen, while I'm getting the screen up, go ahead and introduce yourself.
Okay. Just a quick introduction. My name is Owen Munton. I live in Mississippi, and I work with Hancock Whitney Bank. I've been here for a little over 8 years, and my role is to help support the people making mortgages across Mississippi and Alabama. And so, to address the question about land and construction, we have land loan options. We have construction loan options. Those are different options than what Stephanie presented, and I'd be happy to talk with you anytime about those. But they're a little bit different than what we're presenting today. Today, I'd like to talk about it's a really neat deal. It's called the Opportunity Mortgage Loan. This is a product that Hancock Whitney has developed to help promote housing, especially in what's called a majority-minority census tract, which is basically a neighborhood that consists of more minorities than anything else. So to talk about our agenda today, if you want to flip the slides, you can. We're going to go over the product, the Opportunity Mortgage product. We're going to talk about refinance options, but I don't know that anybody's called in to hear about refinancing, but so we'll go through that very quickly. We'll talk about how we determine what a majority-minority census tract is, the neighborhoods or the areas where we can do these loans. And then I'll go over a quick overview of the mortgages we have available through Hancock Whitney that can help you buy a house, much like what Stephanie did, just a reminder of what's out there. Then lastly, we'll do some question and answer, and I'm happy to answer any question anybody has. So to jump into the Opportunity Mortgage Loan, this is a great loan, and it's got a lot of good features for a first-time home buyer, or really for anybody buying a home. One of the greatest features is there's no down payment required. That means you can borrow the full price of the house. Now, you may have to deal with paying for insurance or some closing costs, but a lot of times people negotiate with their seller to have them pay those costs for them, and then they borrow the full price of the house. This loan has no PMI or private mortgage insurance. That's a monthly fee that you usually have to pay if you don't make a down payment on your home when you buy it. Specifically, if you don't make a down payment of 20% of the price. With this special product, that fee doesn't exist. So that makes this a cheaper product than a lot of the other loans that are out there. You know, Stephanie talked about the area median income and the limitations of the loans that she was talking about. This opportunity loan has no limitation. You could make, you know, hundreds of thousands of dollars and still qualify for this loan as long as you're buying a property that's in the majority minority census tracts that we're going to talk about in just a minute. You can borrow the money for up to 30 years on a fixed rate. That's a really big deal right now. You hear about rates going up. They've moved a little bit over the past few weeks. And it's really good when you can lock in an interest rate and not have to worry about it for the full life of the loan. That keeps your payments fixed and that keeps your stress down. You can buy a house with this loan. You can refinance a house if you already own it and live in it with this loan. But this loan is not made to build houses. This loan it's separate from that. Building a house is a good bit different than buying or refinancing. You have to live in the house or intend to live in it. And, you know, it really needs to be what's called a one-unit residence. What does that mean? Think of like a duplex. You've seen those. It's a single house that has 2 living areas. That type of property is not eligible. It needs to be a single house with a single family living area. In other words, only one family lives in it. And you can borrow, and you know, in Mississippi and Alabama, this really encompasses just about every home. You can borrow up to $647,000. That doesn't mean we're going to approve you for that much, but if you have the right income amount, you could buy a house with no down payment, none of that PMI, do a 30-year fixed rate, and you could buy a $647,000 house on this program. So what's the catch? The property has to be in what we call a majority minority census tract. In the Gulfport, Biloxi area, but we also have other areas like Hattiesburg, Mobile, New Orleans, where we can do this loan if you have family or friends that you want to share this with. So if we could jump over to the next slide. Okay, so refinancing, if you already own a home, we can loan you the full value of the home. If you have a loan on that house and you want to pay that off, that's called a rate and term refinance. It's real simple. We're happy to do it. If you wanted to pull cash out of the house, meaning you want to receive a check at closing, there's some limitations. We can give you up to $200,000 as long as your house value justifies it. And we can use that money to put cash in your hand, pay off additional mortgages on the home, or even do repairs from hurricanes or tropical storms that may have happened recently. So if you own a home, or if you know somebody that owns a home, this is a great option, and they may want to give us a call and see if we can put some cash in their hands. Next slide. So let's talk about how we determine where we're going to do this loan. Okay, so we're talking about, when we say Gulfport, Biloxi, we're talking about the Mississippi Gulf Coast. That's kind of the first check. What we're going to do then is we're going to take an address that you give us, and we can put it into this website that you see here, and the federal government will then tell us what census tract or neighborhood. They'll give us a series of numbers, and then they'll give us the statistics of the neighborhood that show, you know, the income levels. It shows how many people live in the area, how many houses there are, and most importantly, it'll show the percentage of minorities that live in that area. And so what we're looking for is that there's more than 50% of the residents that are classified as a minority. This information comes from your census that's done every few years. And really, it's something you could go to the website and do yourself. But quite frankly, it's not the most user-friendly website. So you may just want to contact one of us, maybe send us an email and say, you know, I've got a property on 123 Main Street that I'm looking at. Would that qualify as a majority minority census tract? You know, Stephanie or I or anybody else that works with us, LaTanya, any of us could look that up in a matter of seconds and give you an answer versus you having to poke around and figure out what all the codes mean and make sure you're in the right area. So it's real important, you know, that the property is in the majority minority census tract if we're going to do the opportunity loan. The opportunity loan is by far the greatest product we have right now to help promote housing. So we always want to check these addresses first as you look at properties. Next slide. So, but let's talk about, you know, our other loans that we have. You know, Stephanie touched on a lot of things, including down payment assistance and plan your way home, and a lot of interesting features to loans. But it's worthwhile to just kind of go over the basic loans that we have, because these are great loans, and a lot of times there's solutions to housing issues right in front of us, and we just need to jump out there and know about them. So we have what's called a conventional loan. That's a loan that is regulated and guaranteed and insured by, you may have heard of a company called Fannie Mae or Freddie Mac. Those are essentially the federal government. The federal government gives us the rules for these loans. If we follow the rules, it allows us to offer you a low interest rate, a fixed interest rate, and allows us to make a loan up to 97%, which means that's a 3% down payment you would have to make. So not as good as the opportunity loan, but still a great product. Our next loan that we do a lot of, it's called a FHA loan, which is the Federal Housing Administration. The Federal Housing Administration, they've been around for decades. They have a very solid loan program. They're a part of the federal government. You might have heard of HUD, Housing Urban Development. And an FHA loan has very flexible credit requirements. And we'll talk about credit scores in just a second. Very flexible on credit scores and very flexible with your budget as far as how much of your income you can spend. An FHA loan requires a 3.5% down payment. So again, it's kind of like that conventional that you're going to have to put money into it. There's places to get money that Stephanie showed you, or there's the opportunity loan that doesn't require the down payment. Another option, which I love, it's one of my favorite loans to do, is a VA loan. It's a Veterans Administration. This loan is designed for military veterans, active duty, retired, whoever they are. They have a certificate of eligibility that we can get that shows they're eligible for a VA loan. And a VA loan is a great deal. It's got a 30-year fixed rate. You do not have to make a down payment. It has flexible credit scores. It has flexible qualifications with you know, how much money you have to make to qualify for it. The only drawback is that it does have a VA fee called a funding fee that's assessed when you do the loan. We can loan you that money. So, you know, you're not having to make a down payment, and we can loan you the fee. You can be exempt from the fee if you're getting a certain amount of military disability. So it's just a great loan. If you know any military vets, it's something that they ought to consider when looking at buying a house. And then we have what's called a rural development loan. And this is kind of a neat loan. It's through the United States Department of Agriculture, or the USDA. And it's actually, it's warm to my heart. My grandfather, many years ago, worked for what's called the Farmers Home Administration at the time, making this same type of loan. He's since, you know, he's gone, and Farmers Home Administration is now the USDA, but it's still the same loan. And so it's really warm to my heart. I've done a lot of them in my career. It's a great product, no down payment required. It's very similar to a VA loan. It's a little bit more harsh on requirements for credit scores and income. And it has some restrictions in that you need to be buying in rural areas. So those are areas kind of outside the city limits of, you know, Gulfport, Biloxi. But it doesn't necessarily mean it's a 100-acre farm. It just means it's not within the proper city limits. Great product. We love it. We do it all the time. Great alternative to the opportunity loan. If for some reason you found a property that wasn't in a majority minority census tract, you know, we immediately would look up to see if it's eligible for a rural development loan. We also call that a RD loan. So great product. And then lastly, you know, new construction, there was a question about, you know, can we finance the construction of a home? Absolutely, we can. Depending on whether you own your land or not, there could be a down payment required. So it's hard to just kind of say how much your down payment would be because we don't know the value of the land at the beginning. But, you know, usually people are making a 10% down payment, and that's 10% of the cost. If they're buying the land and building the home at the same time, then that's 10% of the cost of the land and 10% of the cost of the house. What's really awesome about this loan is it's called a one-time close. So it combines two loans into one to save you money and to make the product more secure for you, in that it gives you a fixed rate from the day you start, you know, working on the loan to the day that the loan, that the home is finished, through the end of the life of the loan for 30 years or whatever that is. So you can set it up under today's interest rates. You don't have to worry about what happens to interest rates as you build your home. A lot of lenders have construction products where you can't set your interest rate until the home is complete. That could be a year from now. So there's a lot of risk there. We love the one-time close product. We do, you know, several thousand of these a year, and we feel like we're pretty good at it. So definitely, if you need to build a house or want to build a house, or you have friends or family that want to build a house, we're a great group of people to talk to about it. Now, something that's not on here that we lightly talked about a little while ago, which is credit scores. It always comes up, you know, what credit scores are required. There's credit score limitations on all these loans. Every loan we do has a credit score requirement. But what I encourage people to do is, you know, there's all these tools like Credit Karma and these other products that can help you pull your own credit score. Those are great. Those are general indications of your credit score. But don't focus too much on those scores until a mortgage lender pulls your credit scores, because we may use a different calculation than you may find on the internet or something to that effect. So reach out to one of us, reach out to, you know, anybody in the industry, and let them pull a score that's one that would actually be used with your lender, so that you have a good comparison or a good baseline of what your credit looks like. Are your scores acceptable? Is there homework we have to do to pull up the scores, or you know, is there a major problem? So just keep that in mind. Reach out to one of us and let us help you with the scores and look at them. So really, you know, we can jump over to the next slide, and it's really just my contact information. You know, I also put it in the chat. Feel free to contact me. Feel free to contact LaTanya. Feel free to contact Stephanie. Feel free to contact any of us. We are happy to help. We've got staff really from Texas to Florida that make loans every day. We've got a great crew in the Gulfport, Biloxi area. We've got 4 or 5 people that are available to help. So don't let a question sit out there and not be answered. If you have a question, ask it. We're happy to answer it for you. And a lot of times we can answer it very quickly. So with that said, are there any questions that anybody has about what I just presented?
Looking to see if anything came up. If you learned anything new, if you would, please just give us a little chat, a little ditty, just one line as to what Ms. Stephanie or Mr. Owen has told us. And if you have any questions for them, there's some other people that have joined and I'm allowing to talk. Ms. Anthony, Ms. Marquinta, Maria. All of you are so knowledgeable in these and then have been great partners. Let's see, 2 new messages. What does that do? Credit, thank you. I'll be contacting you. Okay, Belinda. Okay, got it. Okay. Anything else that we want to ask for Owen? He'll be around just in the background. And if there isn't any questions coming forward now, we're going to go ahead and move on to Victoria. With Mercy Housing, she's going to be our community department, and Owen and I are going to hop off camera while she gets us rolling. And are you controlling your slides? Or do you want me
No,
to?
but it's pretty simple. There's no animations or anything. So.
Okay, so you're going to do it, or you want me to do it?
If you don't mind.
Okay, so let me pull it up.
Okay. So my
Why don't you go ahead and give us an introduction while I'm pulling that up?
Okay, so my name is Victoria McKinney. I am a HUD certified housing counselor with Mercy Housing and Human Development that's located in Gulfport, Mississippi. I've been with them for, it'll be 9 years in August. And our main goal is to promote first-time homebuyer education. So we provide those homebuyer education classes that are HUD approved, as well as also doing credit counseling, money management, discussing different down payment assistance options to really prepare first-time home buyers to be knowledgeable when making their first purchase, as well as second time or future buying again. So we're going to go over the different down payment assistance options that are available. Now, this doesn't include like some specific cities. You can always go to their website and check out if they have what's called Community Development Block Grant, which is through home funds. So they may have those options available in addition to these. So we can go ahead and go to the next slide. Okay, so they come in different forms. Some of them are forgivable in the form of grants if you meet certain criteria. Others aren't forgivable and they come in the form of loans. You can go ahead to the next slide. So there are some different terms that are associated that you'll see with these different programs. So retention agreement, silent or deferred second mortgage or second lien, area median income, which we did cover earlier. So different income limits, as well as principal residence, meaning that it has to be your primary residence, your main home. You can't use this for a rental property. And then you have to be a first-time home buyer, which HUD's definition of a first-time home buyer is someone who hasn't owned a primary residence in the past 3 years. Retention agreement, that is going to tie in with those forgivable grants. So how long you have to stay in the property before the amount is forgiven. Silent or deferred second mortgage, that is going to be, you have your primary mortgage through maybe Hancock Whitney, and then in addition to that, you have a second mortgage. So either you're going to be paying it at the same time as your primary mortgage. So you'll have two payments essentially, or you'll have that deferred second, which is going to be, it's not going to gain interest. It's just going to sit there. You don't have to pay on it. And then if you meet that retention agreement, so you're in the property for how long they require, then they will get rid of that silent second. We can move on to the next slide. So different key elements into accessing different programs. So some of these programs are going to have lists of participating lenders, like earlier Hancock Whitney told you a little bit about the Mortgage Revenue Bond 7 and the Smart 6 that are offered through Mississippi Home Corporation. So different programs are going to have lists of lenders that participate in those programs. Minimum credit score requirements. So some of these programs have their own minimum credit score requirements. And in addition to that, lenders can sometimes overlay additional credit score requirements on if there isn't a base requirement. Mandatory first-time homebuyer education, as discussed earlier. A lot of these programs require that you go and you have this course that is provided by a HUD-approved agency. Income limits, so this will be based on county or based on as well your household. So how many people are in your household and how much money your total household has coming in every year. And again, that area median income that's set in place by HUD. And then acquisition limits. So this is, what the maximum loan or maximum value of the property can be that can be approved by these different programs. And then property conditions and location restrictions as well. You'll see in some of these programs coming up. You can go ahead and move on to the next slide. So the first one that we're going to go over here is going to be the Mortgage Revenue Bond 7. So this is one of those programs that's offered through Mississippi Home Corporation, which is our state housing finance agency that creates these different programs to help first-time home buyers. So some program requirements, got to be owner occupied, so primary principal residence, so it means that you have to live there. Single family detached or attached, condominiums, FHA, VA, conventional. And then we've got cost of the home must be within the maximum permissible acquisition limit based on target or non-target county designation. So they actually have a whole long chart of the different counties and how many peoples are in the household as to what the income limit will be. Like for instance, for the MRB 7 within Harrison County, if you have a 1 to 2 person household, that limit is going to be 67,500. Or if it's a 3+ person household, they have it listed as 77,625 for the household income. And then acquisition limit for target area. So target area, there are some counties and areas that they really want people to move in. So they have different limits on those areas. So you've got 309, and they also have that information listed and detailed in this income limit that you can find on their website. Program features, so you can do 30-year fixed rate first mortgage, FHA insured, VA, USDA, Fannie Mae, Freddie Mac, and then this is going to be $7,000 towards closing costs and down payment assistance. So it's going to go towards all those closing costs. They have a whole list that details which closing costs that they'll roll in there, as well as that down payment assistance. So this is what is called, it's forgivable after 10 years and it does not accrue interest. So this is a silent second or deferred second. So it's just going to sit there with a lien on the deed until that 10 years hits. And once you've been in that property for 10 years and you haven't sold it and you have not refinanced your loan for 10 years, then they will forgive that $7,000. But if you were to sell the property or refinance your loan before that period, you're subject to pay back a portion or all of it, depending on what your income is. So eligibility is going to be those first-time home buyers, or you see listed here, those who have not owned a principal interest in a residence for the past 3 years, as well as they have those target areas. You can move on to the next slide. Okay, so this is the Smart 6 program. So this is really new program that's offered through Mississippi Home Corporation. So this is $6,000 down payment, 0% interest. So this one is it's kind of like the MRB 7, but it's due on sale or refinance. So $6,000, 0% interest, has to be owner occupied. And then, so if you refinance, you sell, or you otherwise abandon the property, you're subject to pay that amount back. So there's no retention agreement as far as 5 years it's forgivable after or anything like that. You will at some point need to pay it back. So 30-year fixed rate mortgage, FHA, VA, USDA, Fannie Mae, Freddie Mac. Benefits to buyers, competitive interest rates. So this is for new or existing homes. So this isn't for, if you're in the process of building, this is either brand new built or already existing homes located in Mississippi. It can be a single family home, townhouse, condo, manufactured home as well. So got to be your primary residence. Household annual income cannot exceed $110,000. Must be a legal resident of the United States, and must have a minimum credit score of 640 or above. You can go on to the next slide. Another program offered through Mississippi Home Corporation is the Mortgage Credit Certificate. So this just adjusts your taxes to help qualify for a loan. And you can claim this credit every year up to, let's see, 2,700 is the limit, or what actually it says with the asterisk next to it, $2,000 per year. Remaining 700 can be carried forward to the next year. So Features of it: a lender follows guidelines depending upon which type of loan is utilized. Mortgage credit certificate can be used with Fannie Mae conventional, fixed rate, adjustable rate, FHA, VA, RD financing, and it can also be combined with their other DPA program, Home Loan Plus, and Smart Solution program. So eligibility is going to be that first-time home buyer again, or someone who hasn't owned a property within the past 3 years. They do have those target areas that they have detailed out on their website. And if you're in that target area, or you're looking to purchase in that target area, you may be exempt from that first-time home buyer rule if you have owned a property within the past 3 years. And the maximum annual income of household members may not exceed certain income limits. So this one as well has a list of income limits. So again, for instance, Harrison County 1 to 2 person household is going to be a limit of $67,500, or a 3 plus person household income limit would be $77,625. And then we have the HAT program as well that's offered through Mississippi Home Corporation. So this is housing assistance for teachers program. So this is trying to get teachers into certain target areas where they really need teachers. So who's eligible? Applicants who agree to render service as a teacher in the district for 3 years, starting with the beginning of the school year. Meet credit eligibility requirements for FHA, VA, RD, Fannie Mae, or Freddie Mac. Program requirements: 25 to 30-year fixed loan rate unless using with another Mississippi Home Corporation program. FHA, VA, RD guaranteed. So mortgage insurance is also required on this product as well. So there's more detail about this on the website. I'm not sure if we have any teachers in the audience today, but we can definitely go over that in detail one-on-one and look at those additional requirements. We'll move on to the next slide. Okay, so now we have the HELP grant. So the Homebuyer Equity Leverage Partnership. So this is monies that were given out from FHL Bank of Dallas to different states to assist with first-time home buyers. So it's only for first-time home buyers. It cannot exceed $11,000 per home buyer. Doesn't mean that you're going to get that full amount, but it can't be any more than $11,000. So household income must not exceed 80% of the area median income. So it's more of that low to moderate income families. Home buyers are required to complete home buyer counseling program. Home buyers must contribute $500 of their own funds towards the required down payment or closing costs. So it will require you to give up $500 of your own money. Home buyers cannot receive any cash back at closing, and home buyers are required to sign a 5-year retention agreement. So that 5-year retention agreement, meaning that you have to stay in the property for that 5 years, so you can't sell it or refinance it or abandon it. And if you do that, then it's forgiven after that 5-year period. You can move on to the next slide. Okay, so this is one example of the Community Development Block Grant. So this one is for Gulfport. So year to year, depending on how much funds that they have available, will depend upon what their maximum that they can give out is. And then also they're going to look at how many people are in the household versus what your income is to determine how much assistance you can receive, as well as what amount you end up getting approved for with the lender as well. So this is going to be based upon need. And you'll see here real quick for affordability period. So their retention agreements differ. So if you're the assistance that you receive is, $15,000 or less, and it's 5 years. If it's $15,000 up to $40,000, then it's for 10 years. Or if it's $40,000 or more, then it's 15 years. So it says here, home DPA funds are allocated on a first come, first served basis through a formal application process. So with this particular grant, if you're interested in it, you'll be applying directly with the city of Gulfport. You won't go through a lender to apply for this particular program. Eligible applicants are provided with home purchase assistance to apply towards down payment and or closing costs, and is available to individuals, families, and households earning 80% or less of the area median income, with eligibility based upon current and anticipated annual income of all persons that will occupy the home as their primary residence. Purchased homes must be existing homes and located within the approved jurisdiction. So these cannot be, brand new builds. It can't be under construction. It has to be already existing homes. And it can't be in a flood zone. It cannot, the house has to have been built after 1978 when they stopped using lead-based paint. And it has to be move-in ready. So if they do an inspection and they see some things that need to be replaced, repaired, anything that's going to fail an inspection, then they're not going to approve it. It has to be move-in ready. Assistance is provided as a deferred payment lien based on primary residence. So as we previously discussed, that retention agreement, if you sell your property, refinance that loan, vacate the premises before your retention agreement is up, you are subject to pay back a portion of that you received. So assistance provided as a deferred payment lien based on primary residence, which requires the home purchased to remain the primary residence of the home buyer for an affordability period determined by the amount of funding received. A deed of trust and promissory note will be attached to ensure the recapture affordability requirement. No repayment will be required if the homeowner remains in full compliance of the terms of the program. Okay, we can go on to the next slide. All right, so this is my contact information. Like I said, I'm a HUD-approved housing counselor with Mercy Housing and Human Development. We're located on Ford Street, which is off of East Pass Road in Gulfport. We do homebuyer education, credit counseling, money management, foreclosure prevention. We'll discuss those down payment assistance programs in more detail and see what you might be eligible for.
Thank you so much. This is fantastic. While I'll keep your screen up just for a little while longer, so those that are on the call that want to get in touch with you can. Tell me how your relationship with Hancock Whitney works. Like yeah.
Okay, so you have first-time home buyers who walk into Hancock Whitney and they are looking to purchase their first home. They go and they talk with someone, maybe they have their credit pulled to see where it's at. And they discover there's some things on there that may hinder them from the process right now, but are obviously things that we can help them with. So they'll actually refer them over to us. We'll do that soft pull on their credit, which means it's not going to hurt their scores, go over everything that's on there and create the action plan that's going to move them forward. And then we can refer them back to Hancock Whitney once they are credit ready.
Okay, fantastic. And I know that they respect your position and Mercy Housing very much because of the fact that you prepare people to have those conversations, that they understand the ins and outs, that they, have some glimpse of what their future can be, and how this can be like a synergistic, partnership and relationship. So right. I've learned so much from you, and I appreciate everything that you brought to the table. If everybody wants to come back on camera, that would be great. Ms. Stephanie, Mr. Owen, Mr. Karsha. I want to make sure that we all show our faces and are available to anybody that might have some questions. I'm going to, this is the time, please, to just tell us, what you've learned, or if you have any questions for anybody. This is such an opportunity. There's very few people have the ear of folks that can answer questions about, bringing your dreams to fruition. So I just would not, or you haven't been through the process, to have, people who are here and wide open to answer questions. And not everybody can see who's talking. So, if you're fearful of it being, sounding silly, there's no silly questions. And just make sure that you're going, if you just don't want to talk about it in this forum, Victoria has her information in the chat. LaTanya has her information in the chat. Mr. Owen does too as well. Miss Stephanie flashed that up at her at the end of her PowerPoint. So please make sure that you document some type of outreach contact information, so you can follow up if you're just not comfortable answering here. So does anybody have any last minute things that they'd like to say to the folks on the call?
I'd like to say something, Ms. Victoria, something that I ran into with the Mississippi Home Corporation, the home, to let the viewers know, or if they've taken the class, we sometimes it's 2 years or more before we receive those home buyer training certificates, and some of the groups will not take them over that long period of time. They require them to be done within the last year. So if you let, I don't know if yours expire, is there a timeline that you put on there for the home buyer training certificates?
Oh, that we issue after they complete the course?
Yes.
We actually put 2 years.
Okay. I just found out the Mississippi Home Corporation will not take them over a year. So, that's good to, let them know that they do expire, because they think, a lot of times they'll last forever. So, yeah.
So LaCarsha, would you like to make any remarks and begin to wind us down? You're on mute.
I know, isn't that something?
There's a if I had a chance to make some pandemic t-shirts, it would be social distancing and you're on mute, You're on mute.
And then sometimes you're double. And even sometimes you're double muted.
Right. Yeah.
That's the fun thing about it. But I just want to say, fabulous presentation, everyone. I was sitting here thinking, what adjective could I use? I mean, I can't think of one. It's been phenomenally great, awesome, magnificent. I've really enjoyed it. Great presentations. I just want to say also to our presenters, fabulous work, fabulous job. Thank you so much for providing the resources that you've provided. Very detailed. Thank you to our attendees, our participants. Great opportunity for you to hear all of the resources that are available. Thank you all so much for sharing your expertise. And I just want to say, whether you are a first-time home buyer, as Tish and Victoria, Stephanie have mentioned, there are resources out there. They are available to assist us. And if you are an existing homeowner, needing some refinancing, Owen touched on that. So, and he even mentioned, if you are in a majority minority census tract, there are resources available for you. So you can't miss it. It's great presentation, great detailed information. And I want everyone on this call to remember that you heard it right here at Hancock Whitney Bank. One of our presentations in the Tampa market, I believe it was Maria that said something that's really stuck to my mind. She says, just because it's free doesn't mean it's not beneficial or that it's not valuable. And I want each of you on this call to remember that this was a free presentation brought to you via Zoom by Hancock Whitney Bank, our very own partner, the Legacy Business League, as well as Mercy Housing and Human Development. And I want to say a special thank you to all of the presenters as well as the attendees, but I do want to say to Anthony Montgomery, you introduced us to, and I say this all the time, but I can't thank you enough for the introduction that you made with myself, Legacy Business League, and as well as Miss Angie. It's been a great, powerful introduction, and we just joined in forces, and we've been doing what we do for a very long time, and I really appreciate you for that. Thank you, Maria. I think I saw Susan. Some of our community leaders have had to get off the line, but really want to thank you for your support and your leadership. Thank you, Tish, for all you do and for the team that you lead. Thank you, Owen. Fabulous. That was good. I really appreciate it. Great information. Thank you, Stephanie, and our partners always, Mercy Housing, you always come through for us. We really appreciate you and all that you do. And as you see, my phone is ringing. It's probably somebody wanting to get registered. For
That's
the
right.
session.
That's what we're looking for. LaKarsha, before we close it out, someone did have a last minute question. Are the grants stackable? I'm not really sure where in the that might have been Victoria's presentation. Are the grants stackable?
I can-
Oh, go ahead.
Yes.
So the
Yes.
question is, yes, the grants can be leveraged with the first mortgage loan in addition to, multiple grants. Now, let me say this. So not all grants can be stacked.
Okay.
And the reason why is because, so can grants be stacked? Yes. Can all grants be stacked? Not always.
Okay.
Because they may come from a different pool of funds. And sometimes you can have an official name of a program, but the funding source might be the same, and therefore we can't leverage them or stack them. But as long as they're from independent sources, and we are allowed based upon guidelines to stack them, then that can be done. And of course, you would have to be eligible for all of the programs in order for us to stack them if they are stackable.
Okay. All right. Well, I think that answers that. And I'm glad we were able to get that back in for the person who inquired about that. So LaKarsha, I'm sorry that I cut you off, but I hope that you were able to say all of your thank yous. And again, please, IamLegacy.org is where the videos will be housed. They're actually up on YouTube. I have them on private right now, and then I just want to place them somewhere. So I may just actually send y'all the link to the Legacy Business League's YouTube page, because I already have a link for them that I need to get the first series to LaKarsha, and I'll get the second set to her, and then after we finish these, you can use them as you want, but we'll put them in a central place. And we have the email addresses of the registrants and participants. So we'll email that back out to y'all. So you will have all of that information. So we appreciate you. So looking forward to the one tomorrow. That'll close out our third series. That is which Baton Rouge? Baton Rouge. All right, but for now, goodbye, Gulfport. Thank you for coming on and for the partnership that we have to make people's dreams come true.
Thank you.
Y'all have a good one.
Thank you all so much.
Thank
Enjoy
you.
your afternoon.